Are you feeling the pressure to spend more than you should this holiday season? The holidays can easily lead to credit disasters if we're not careful. You see the sales, you think of the gifts, and suddenly your credit card balance is skyrocketing. In just a few minutes, I'm going to show you how to avoid a holiday credit disaster and make sure you don't carry a financial burden into the new year. First off, let's get real. Credit card debt can spiral out of control quickly. The average American racks up a few $1,000s every holiday season. And with the credit card companies charging high interest rates, it doesn't take long for that balance to grow. By the time you start paying it off, you're already paying more in interest than you originally spent. But you can avoid that nightmare. One of the first things to do before diving into holiday spending is set a strict budget. You need to know exactly how much you can afford to spend without relying on credit. This isn't just about looking at your bank balance. It's about being realistic with your expenses and setting a hard limit for yourself. Whether it's $500 or $5,000, stick to it. Don't let yourself go overboard. Also, always pay off your credit card balance in full if possible. I know this is tough with big purchases, but the best way to avoid credit disaster is to not carry a balance that will accumulate interest. Many people think paying just the minimum is enough. It's not. That's a trap. If you're only making the minimum payments, you'll barely make a dent in what you owe, and that interest will eat you alive. Now let me mention something that's a game changer if you're serious about securing your wealth. Gold IRAs. If you've got substantial savings, whether it's 100K or 5 million, this could be a lifeline for you. I've seen firsthand how gold IRAs help retirees protect their wealth against inflation and economic downturns. If you want to learn why thousands of Americans are opening gold IRAs this holiday season to protect their wealth, check out the first link in the description below. It's a free guide that's perfect for people serious about their financial future, especially those of you with 100K plus in your IRA or 401K, or even 5M plus in savings. Back to your credit. Make sure you're aware of any holiday-specific spending promotions that might sound good, but really aren't. Things like buy now, pay later, or 0% interest deals can sound tempting, but if you're not careful, you'll end up paying more than you planned for. Always read the fine print. That no interest deal could come with unexpected fees or an interest rate that kicks in later, leaving you stuck with a bigger bill than expected. Another tip, prioritize your purchases. Don't just buy because it's on sale. Focus on what's truly important and will bring long-term value to you. Impulse buying during the holidays is the quickest way to spiral into debt. Stick to your budget, and if you find something you didn't plan on buying, ask yourself if it's worth delaying until after the holidays. For those of you with larger savings, the holidays can be a perfect time to think about financial stability long-term. You might want to consider diversifying your wealth, especially when the stock market is volatile. Gold IRAs are a smart, tangible way to protect your savings. Gold has historically been a reliable hedge against inflation, and that's something that can help protect your future if you're looking to preserve your wealth. Before we wrap up, here's something I want you to remember. If you're serious about protecting your wealth in the next 2 weeks, the steps you take now matter. Avoid that credit disaster, stick to a budget, pay off those balances, and consider diversifying your assets with a gold IRA. It's a perfect option for those of you who have 100K plus or more in your IRA, 401K, or even 5M plus in savings. So, if you want to learn more about how gold IRAs can protect your wealth and avoid the holiday credit trap, click the first link in the description below to grab your free guide. You don't want to miss this. Take control of your financial future today.